Welcome to Express Financial Insights, where we delve deep into the complexities of global finance. In today's episode, we are set to tackle a gripping debate that's been stirring interest across the financial world: gold versus Bitcoin, which is the superior store of wealth. We will scrutinize the distinctive attributes of both these assets, from gold's limited supply and virtual indestructibility that have made it a trusted store of wealth for ages, to Bitcoin's digital scarcity, decentralization, and potential for high returns. We'll also analyze these properties have made gold and Bitcoin popular for wealth preservation, especially during periods of market volatility. So prepare yourselves as we embark on this intriguing journey of comparison, understanding why gold, a symbol of stability, and Bitcoin, a symbol of innovation, are both vying for the title of the ultimate store of wealth. Now let's shift our focus to Bitcoin, the digital gold of the 21st century. Just like gold, Bitcoin has a limited supply, a key characteristic that makes it a potential store of value. There will only ever be 21 million Bitcoins, a cap set by its creator, Satoshi Nakamoto. This scarcity mirrors that of gold and other precious metals, making Bitcoin a sort of digital equivalent. Furthermore, Bitcoin is divisible. Just like gold can be melted down and reshaped, each Bitcoin can be divided into 100 million smaller units, known as Satoshis, allowing for precise transactions no matter how the value of Bitcoin fluctuates. But what sets Bitcoin apart is its democratic design. It's a decentralized network, managed by a community of users all over the globe. There's no central authority, no bank or government pulling the strings. It's the people, the users, who hold the power. And let's not forget its counterfeit-resistant nature. Bitcoin transactions are stored on a public ledger called the blockchain. This technology ensures that each Bitcoin is unique and cannot be duplicated, making Bitcoin virtually immune to forgery. With these unique features, Bitcoin is certainly carving out a niche for itself in the financial world. But like all investments, both gold and Bitcoin come with their own sets of pros and cons. Let's dive into the world of bearer instruments, specifically gold and Bitcoin. On the upside, gold and Bitcoin offer significant benefits as bearer instruments. Gold for centuries has been a reliable store of wealth and a safe haven asset during market crashes. It's tangible, can't be hacked, and doesn't require an internet connection for its ownership or transfer. On the digital side, Bitcoin mimics some of these properties, yet offers innovative peer-to-peer transactions without the need for a financial institution. It's divisible down to the 8th decimal place, making it highly flexible for transactions of any size. And let's not forget, it's easy to carry around, well, digitally. However, there are downsides to consider as well. For gold, physical security is a significant concern. You need to safeguard it from theft. With Bitcoin, the risk shifts to digital security. Safeguarding private keys becomes paramount, and the threat of losing access to your Bitcoins due to forgotten passwords or hardware failure is real. Investors must weigh these factors before making an investment decision. Can you invest anonymously in today's digital age? It's a question that many are asking, particularly with the rise of cryptocurrencies like Bitcoin. The allure of anonymous investing is strong. It promises privacy, freedom, and control over one's financial destiny. But is it really possible? In the world of Bitcoin, transactions are pseudonymous. That means while your name isn't directly linked to your Bitcoin address, all transactions are logged on the blockchain, a public ledger. So with some digging and a bit of detective work, it's possible to trace transactions back to their origin. Then there's gold. Investing in gold can be anonymous to a certain extent. You can buy physical gold with cash from a private seller and there's no digital trail. But storing large amounts of gold safely? That's another story. So yes, anonymous investing is possible, but it's not without its complications. From the risk of theft with physical gold to the potential traceability of Bitcoin, it's a risky venture that requires careful thought and consideration. Investing anonymously might seem appealing, but it comes with its own set of challenges. Does Bitcoin offer a stable investment value? This is a question that has been on the minds of investors around the globe. Bitcoin, a digital currency, is known for its volatility. Its price can skyrocket or plummet in a matter of days, even hours. This unpredictability is a double-edged sword. On one hand, it offers the potential for massive gains. On the other, it poses the risk of significant losses. Bitcoin's volatility is a result of several factors. It's largely driven by supply and demand dynamics in the market. However, regulatory news and key developments within the Bitcoin community can also have a significant impact on its price. Given these factors, Bitcoin can be a risky bet for those seeking stable investment value. It's not for the faint-hearted. However, some investors see this volatility as an opportunity, not a drawback. They argue that the potential for high returns outweighs the risks. So, is Bitcoin a stable investment? There's no one-size-fits-all answer. It depends on your risk tolerance, investment goals, and understanding of the cryptocurrency market. One thing is certain though, Bitcoin's stability as an investment is a topic of heated debate among investors. Is gold always a stable investment? Contrary to popular belief, gold isn't always the steady stalwart we imagine it to be. In fact, it can be quite the roller coaster ride. There are times when gold displays a certain volatility, but it's not without good reason. It's during these turbulent times that gold proves its mettle. No pun intended. The value of gold can fluctuate in response to various factors. These could range from geopolitical events, economic shifts, to changes in supply and demand dynamics. Let's take an example. When the economy is on shaky ground or when inflation is on the rise, investors often flock to gold. This surge in demand can cause gold prices to spike, creating a volatile market environment. But here's the twist. This volatility, often seen as a negative trait in other assets, becomes an advantage in the case of gold. It provides an opportunity for investors to buy low and sell high, potentially earning substantial returns. So, while gold is generally seen as a safe haven, its volatility shouldn't be feared. Instead, it should be embraced as a chance to maximize profits. After all, in the world of investments, no risk often means no reward. Gold's occasional volatility is a part of its charm, offering opportunities for high returns. Did you know that both gold and Bitcoin were born out of chaos? Yes, indeed. Let's take a trip down memory lane. Thousands of years ago, amid the turmoil of fluctuating barter economies, gold emerged as a reliable medium of exchange. Its rarity, luster, and indestructibility made it a universal store of value, a beacon of stability in a chaotic world. Fast forward to the 21st century, to the aftermath of the 2008 financial crisis. Trust in traditional financial institutions was at an all-time low. It was in this climate of uncertainty and distrust that Bitcoin was born. A pioneering cryptocurrency, Bitcoin promised a new financial order, free from the control of centralized authorities, a digital gold for the digital age. So, whether it's the ancient allure of gold or the modern appeal of Bitcoin, both assets have their roots in periods of chaos and uncertainty. They emerged as solutions, as opportunities, as ways to restore order and stability. Chaos, as they say, breeds opportunity. The million-dollar question: is Bitcoin really money? This query has been at the heart of countless discussions ever since the birth of this digital asset. To some, Bitcoin is indeed money. It's a medium of exchange, a unit of account, and a store of value. The three key characteristics that define money. It's decentralized, secure, and operates independently of any central authority. It's borderless, allowing for global transactions in a matter of minutes. Yet, others argue Bitcoin falls short. They point out its volatility, which undermines its function as a stable store of value. Moreover, its acceptance as a medium of exchange is still limited, and its legal status varies globally, with some countries embracing it, while others outright ban it. Then there are those who view Bitcoin not as traditional money, but as a new asset class altogether. They see it as digital gold, a hedge against inflation, a tool for financial freedom. Whether Bitcoin is money or not is a question that continues to spark intense debates. Let's compare the market dynamics of gold and Bitcoin. Gold, as we all know, has been around for centuries. Its market is well established and vast, with liquidity supported by large institutional players and countries themselves. Gold is traded around the clock, across numerous global exchanges, making it a stable and reliable asset. On the other side, we have Bitcoin, the digital gold. The market for Bitcoin is significantly smaller and less liquid. It's still in its nascent stage, dominated by retail investors and some institutional players. The relatively smaller size leads to higher volatility, making Bitcoin a roller coaster ride, capable of significant gains or losses within short periods. But here's an interesting twist. Despite its volatility, Bitcoin's market is operational 24/7, unlike traditional markets. It's not bound by business hours or geographic limitations. This around-the-clock trading can be both an advantage, providing constant access, and a disadvantage, leading to potential sleepless nights for the more anxious investors. The contrast in market dynamics is a key factor to consider while investing in gold or Bitcoin. How can gold and Bitcoin fit into your investment portfolio? A well-diversified portfolio spreads the risk across different investment types. Gold, a traditional store of wealth, is known for its stability and resilience during market crashes. It's a tangible asset that has stood the test of time, offering a sense of security and peace of mind. On the flip side, Bitcoin, the digital gold of the modern era, brings an innovative edge to your portfolio. With its potential for high returns, Bitcoin serves as an exciting, though volatile, investment. Its decentralized nature offers a level of freedom not found in traditional investments, making it a suitable choice for the tech-savvy and risk-tolerant investors. The key is balance. Both gold and Bitcoin have their unique strengths and risks. While gold provides stability, Bitcoin can offer impressive growth. Allocating a portion of your portfolio to each allows you to capitalize on their benefits while mitigating potential downsides. Remember, the goal isn't to choose between gold and Bitcoin, but to understand how they can work together in your portfolio. Balancing gold and Bitcoin in a portfolio can provide a hedge against market uncertainties. Is Bitcoin the only cryptocurrency worth investing in? This question has likely crossed your mind as you navigate the vast sea of the crypto world. While Bitcoin has certainly earned its place as a major player, it's far from the only game in town. Enter altcoins, the diverse array of cryptocurrencies that aren't Bitcoin. These alternatives offer a range of potential benefits for investors looking to diversify their crypto portfolios. From Ethereum's smart contracts to the privacy features of Monero, altcoins bring unique qualities to the table. Investing in altcoins can be a way to hedge against the volatility of Bitcoin, and with thousands of altcoins on the market, there's a vast pool of opportunities to explore. Plus, smaller market caps often mean lower entry points, making altcoins a viable option for those looking to dip their toes into the crypto waters without breaking the bank. But remember, diversification isn't about throwing your funds into every altcoin you stumble upon. It's about strategic selection, careful research, and understanding the risks involved. Diversifying your crypto portfolio could potentially open up new avenues for growth. And that's a wrap on our deep dive into the world of cryptocurrencies and their place in your investment portfolio. We've explored the ins and outs of Bitcoin, dabbled in the realm of altcoins, and even dared to compare crypto with traditional gold. We hope that you've found this journey enlightening and that it has equipped you with the knowledge you need to make informed investment decisions. If you found this video informative and helpful, we'd appreciate it if you could give it a thumbs up. Your likes help us to reach more people and share this valuable information with a wider audience. And while we're on the subject of sharing, why not consider subscribing to our channel? We regularly upload content on a wide range of financial topics, from the latest investment trends to timeless financial wisdom. By subscribing, you'll ensure you never miss one of our videos and stay on top of your financial game. Remember, your support helps us create more content like this, so don't forget to like and subscribe. Join us next time as we venture deeper into the world of finance, unraveling the complexities and shedding light on the mysteries. Until then, keep investing and stay savvy.